you're watching this and you're a new investor or you're a seasoned investor, do not panic sell, and here is why. Last time I panic sold, Amazon was at $1,300, Shopify was at $150, and Tesla was at $80. Yes, the market is going to shit right now. Ukraine is getting effed in the butt by Russia, but I have 3 things to tell you that'll help you make money in this market and help you make money in the stock market in general during these times. So let's get right into it. The first one, you always have to look at historicals and think long term. Big, bold letters, think long term. If you look at the history of the stock market and go back on a 20-year chart, it is steadily going up. Times like this in the market are inevitable. Markets go up and markets go down. So you should not panic and sell some really good stock holdings that you have just because the greater markets are falling. You might want to sell because you have some tax burdens. You just don't want to panic sell for no reason just because the market is selling off. And let me tell you, I am a victim of this. I've done this multiple times where markets decline, I panicked, I sold, and if I just would have waited a little longer, stuck it out, stuck with my gut, I would have made a lot of money, but instead I panic sold like the rest of the market and lost a bunch of money. So I don't want you to make that same mistake. It is a very true story that I sold Amazon at $1,300. I had about 20 shares. And the reason I sold is I was down like $5,000. It was every single dollar I had was invested in Amazon in those 20 shares a few years back. And the reason I sold was I had a tax break coming up and I was like, should I save money on taxes? Should I sell? And if I literally would have held onto the shares 3 months later, I would have almost doubled my money. My 20 grand would have turned into like 40 grand. So the reason I panic sold was market was declining. It was every dollar I had. And I had a tax event coming up where I could have saved money on taxes by taking a loss. Never do that. You don't need to do that. And that brings me to my very next point. You should definitely not go all in all at once. A crucial mistake is some people invest too much money too quickly while markets are falling or while markets are going up. And when you invest all of your money, that's when you're on edge. If you invest money that you're okay to lose, you'll never have that panicky feeling. Like right now, I'm sitting on about 50% cash and 50% equities. So even though my account's down 20, 25%, I'm not panicking because I know 1, markets are going to come back up, and 2, I have a huge cash position. It's not all the money I have in stocks, and God forbid something happens, I still have that safety net of cash. So definitely you don't want to go all in, whether you're buying individual stocks, ETFs. As markets decline, slowly buy each and every day, once a week, however you want to time it, just slowly buy into the market. You don't want to have all your money in at once. If you have every single dollar to your name in the stock market, this will cause you to make irrational decisions, and you'll more than likely panic sell because of this. In a market like this, you should definitely buy ETFs and not individual stocks if you're still newer to the market. A couple of my favorites are VOO, which is the Vanguard S&P 500 index. So basically you're investing in the S&P 500, and VTI, which is the total index for all the stock markets, whether it's Dow Jones, the NASDAQ, the S&P, it groups them all into one. And the reason you should be investing in these instead of individual stocks, they have less volatility. Max, right? Max, this is not true, but usually the max in an index can fall is 50%, and that's an obliteration of the market. Whereas if you're investing in individual stocks, like in some cases that have just happened, Peloton, Roku, Shopify, some of these names have declined 60, 70, 80, 85%. So you have a much greater chance of losing your money by picking individual stocks than investing in ETFs. If you buy a little bit of an ETF as the market falls, once a day or 3 times a week, or even once a week or once a month in a bear market, you'll end up in a much safer position. Your losses will minimize. And if you're buying individual stocks, buying individual stocks is really hard. And if you listen to Warren Buffett, this is exactly what he wants. All of his money, if he dies today, he wants his money plunged into an S&P 500 ETF. So the moral of the story is, the stock market taking a shit right now? Yes, it is. Please do not panic. I promise you, if you just wait it out, whether it's a couple weeks, a couple months, a year, maybe a year and a half, 2 years, just wait it out, stick with your guns, buy a little bit more each and every day. I know it's super hard. Trust me, I've been there. It happens to me all the time. You want to just get rid of everything and not touch anything because you're sick to your stomach. Just buy a little each and every day. Stick with the information I gave you in this video. Don't panic sell. You'll kick yourself in the balls if you did. And that's it. So if you got some value, like and subscribe. I crank out money videos, e-commerce videos, real estate videos all the time. I'll see you guys on the next one. Peace.